Imagine this for a moment. The same Wall Street giants who once laughed at retail investors predicted AMC's death and bet billions on its collapse are now the ones on shaky ground. The irony couldn't be clearer. The company that was supposed to be buried years ago is still standing strong, while some of its loudest critics are the ones staring down bankruptcy. Today, we're diving deep into Citadel's struggles, the reality of AMC's floor price, the growing confidence of retail investors, and why the battle between short sellers and AMC apes is reaching a whole new level. Stay with me, because the full story paints a picture that Wall Street doesn't want you to see. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But everyone, remember, this is not a financial advice video. Let's begin with AMC itself. Back in 2020, analysts and so-called experts confidently declared that AMC was finished. Theaters were empty. The pandemic had shut down Hollywood, and big financial institutions expected bankruptcy filings to arrive any day. Fast forward to 2025. Not only is AMC alive, but major blockbuster release dates are already scheduled well into 2027 and 2028. Think about that for a second. A company that Wall Street wrote off as dead is now projecting years of growth and planning massive future content. That tells us one thing: AMC isn't just surviving, it's preparing for long-term success. Now, while AMC is planning for the future, let's look at the firms that have been betting against it. For years, hedge funds and short sellers have hoped AMC would collapse, maybe in 2020, maybe in 2026, maybe at some undefined point in the future. But the truth is, AMC is in a stronger position today than it has been in years. Meanwhile, some of the very firms praying for AMC's downfall are facing serious trouble themselves. Take Citadel, for example. According to reports and filings over the past year, Citadel has been forced to close out risky and over-leveraged positions. Their revenue has slumped, their profits have declined, and their so-called smart investments are turning into costly mistakes. One of those investments? Spirit Airlines. Spirit filed for Chapter 11 bankruptcy not once but twice this year. The most recent filing sent its stock crashing 45% in a single day, with trading halted. Billionaire Ken Griffin's Citadel was among those who previously tried to scoop up Spirit, believing it was a bargain. Instead, it's turned into a financial disaster. Whether Citadel was shorting Spirit for profit or investing for growth, one thing is clear: they miscalculated badly, and they're the ones losing money. Now contrast that with AMC. Retail investors, the apes, have watched hedge funds cheer for AMC's destruction for half a decade. But instead of collapsing, AMC has steadily improved its fundamentals. Revenue is up, income is stabilizing, the business model is adapting. Meanwhile, the hedge funds, their fundamentals are slipping. Declining revenue, shrinking profits, and failed investments. The roles have reversed, and that's exactly why short sellers are panicking. Here's another interesting development. A website many AMC investors followed closely for years, amcfloor.com, has recently gone offline. For a long time, this site attempted to estimate a floor price for AMC, a theoretical value where the stock could squeeze based on factors like naked short selling, dark pool activity, spoofing, and manipulation. While the site never had a perfect formula or official data, it symbolized the community's determination to track what was really happening behind the scenes. Now it's gone, and the timing is suspicious. Did the creators shut it down voluntarily? Or did short sellers under growing pressure push for its removal? We can't know for sure, but one thing is undeniable: suppression tactics against AMC are real, and retail investors remain committed to exposing them. Speaking of suppression, let's talk about dark pools. In just the past 10 days, over 81 million AMC shares have been traded in dark pools. Think about that. Tens of millions of shares hidden away from the public market, away from retail eyes. This isn't normal trading behavior. It's deliberate manipulation designed to prevent AMC's price from reflecting true demand. Every time AMC's price dips, retail knows it isn't natural selling pressure. It's the result of buy orders being rerouted, hidden, and controlled. And that's exactly why apes remain strong. They've studied the data, they've connected the dots, and they know the game being played. But Citadel and other firms aren't just using dark pools. Another weapon in their arsenal is internalization. When a market maker like Citadel processes buy and sell orders against its own inventory instead of routing them through the official clearing system, those trades don't show up on DTCC books. In other words, the public can't see them. That's how synthetic shares, FTDs, failures to deliver, and endless hidden positions can exist without being properly recorded. It doesn't mean those positions vanish. They're very real and very risky. But for years, this trick let Citadel avoid scrutiny. Now, with profits falling and loans piling up, the weight of those hidden positions is catching up to them. Another signal of desperation is the wave of FUD, fear, uncertainty, and doubt being spread about AMC online. You've probably noticed it. Comment sections, Twitter threads, Reddit posts filled with negativity, all insisting AMC is doomed. But let's not forget history. The last time AMC faced a coordinated FUD attack, the stock spiked more than 300% in a single day. That wasn't a coincidence. It was the result of shorts scrambling to cover while retail stayed firm. Whenever the negativity ramps up, it's usually because institutions are nervous, not because AMC is weak. And that brings us back to the bigger picture. For years, shorts have dreamed of AMC's bankruptcy. They've thrown every trick in the book at it: naked shorts, dark pools, synthetic shares, endless FUD. Yet here we are in 2025 with AMC still standing, still growing, still planning years into the future. Meanwhile, the firms betting against it are racking up losses, forced liquidations, and bankrupt investments. The tables have turned. So here's the takeaway. AMC is more than just a stock. It's a movement. It's retail investors refusing to be bullied by Wall Street, refusing to let manipulation define reality. The fundamentals are improving, the future is bright, and every day short sellers are running out of time, money, and excuses. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.